let's move on to the market, starting with the Nigeria market update. NSE All-Share Index gaining 3.2% to close at 34,502.37. Now, some of the gainers seen Dangote Cement, which led a gain of 10%. We also have other gainers. We have FBN Holdings 3.1%, CAP up 9.9%, Nestle Unilever up, Cadbury up as well. We saw losses in the likes of Nigerian Breweries, Total, and GlaxoSmithKline. Now, joining me to discuss the market is, as I said, Efe Omoduemuke. He's a fund manager at Stanbic IBTC Asset Management. Now, Efe, let's focus on some of the performance of some of the companies that we've seen recently. Let's start with FBN Holdings Q1 results out, revenue up, PAT up. Now, that share price has gone up today as well. So it'll be good to know your view on what you feel would differentiate these banks going forward.
Okay, thank you, Didi, for having me on the show. For First Bank, basically, we think that for all the banks, because of the CBN's drive to reduce the commission on turnover and also to increase the rates paid to deposit holders, we think that it will be a challenge for the banks. But for First Bank, as a special case, we think that what would differentiate these banks would be their deposit base and the number of locations that you can find them. So First Bank basically has probably the widest network coverage, and we think that they've also, according to the CFO this morning, he also mentioned that they are focused on increasing their location. So we think that that would be the main distinguishing factor for all these banks going forward, and this should be able to this should enable them reduce their cost of funds and as well increase their earnings going forward.
Okay, now, as I said earlier, we had full year results out from chemical and allied products. Revenue up, profit after tax up. We have a dividend of 70 kobo per share, bonus of one for four. Q1 results also good. Revenue up, profit after tax up. Now, market reacted positively to the news. We saw that stock going up 10% on Tuesday and also 10% today as well. Now, let's talk on the prospects of that stock. That stock has gone up 52% this year. Is this sustainable?
Basically, I don't think that the upward trend is sustainable. I think that there will be a slowdown sometime within the quarter. The stock has, right, as you rightly said, has rallied about 55% thereabout up till today, and I think that somewhere towards the end of the month we will see a correction. But basically, what I would like to say about the stock is, for the paint sector, we think that there is a positive correlation with the infrastructure sector. So the fact that we see a positive outlook for the infrastructure sector, we also see a positive outlook for that company as well. And we think that earnings will continue to grow as we continue to see more infrastructural developments going forward.
Now, that company has also declared a dividend yield there, 1.6%. Now, I want to talk a bit about that because I've had conversations with other analysts and market watchers on the show that have stressed, the importance of rewarding investors with good dividend payments. Now, however, we've seen, the results, the market now react positively to what could be considered as not a fantastic dividend yield there from the company. So I guess the question is, what is driving the reaction we are seeing in that stock?
Okay, as other analysts must have said, that the market rewards dividends highly and punish companies that do not pay out dividends strongly. For CAP, I think the case is kind of special because the dividend that we are looking at is not necessarily the cash dividend that has been declared. That is about 1.6%. Investors are also looking at the bonus that has been proposed, and they factored it out to try to work out an anticipated dividend yield. So I'll give you a typical example. Investors basically, as in local investors, what they'll be looking at is how much can I get from this stock. As a starting point, we could say everything else being equal, let's assume that the company is marked down for bonus today. and it tends to trade, because if you look at the trend, it might be hovering around the 48 naira mark. So if it drops down after the markdown and rises back up to about 43 bucks, investors would have banked about 25% thereabout. So investors are looking at that. Also, for the company, the growth prospect is quite strong, like as I mentioned earlier, and investors will also factor that in the valuation. I think that basically is what is driving their interest.
Let's talk a bit about the insurance sector. We saw Mansard Insurance full year and Q1 results out. That stock has gone down today. Initially went down, but let us know your thoughts on that result.
Okay, I think the result from my own point is fantastic, being that Mansard is one of the insurance companies that we hold highly in terms of their corporate governance, in terms of their management structure, in terms of how the company is positioned, in terms of their drive in marketing, and the way the company is operated generally. So we think that coming now as basically the first insurance company with its Q1 result attractive, although I think that the gross earnings dropped by about 10%, but they were able to make that up by cutting costs, and we saw the net earnings going up by about 22%. So that result is actually good, and I expect that the market would favor the stock going forward.
We also have results from UAC Property Development Company, good results as well. We have full year and Q1 results. So give us your view on that company's performance and the market reaction.
Okay, for UAC is a company that we'll call kind of a global company. It's almost in every sector of the market, and I think that the market generally has priced this advantage into the security. For a company such as that has good prospect to declare such fantastic bonus and dividend, I think that we should see an upward movement in the price. And I also believe that because of the expansions that we've been seeing going around the company and the structure that the company has been adopting, moving into the paint space, moving into partnering with the likes of Tiger Brand and the rest, we only expect the positive side of the company to show forward, and I think that it's a good buy for investors at this moment.